Hello and welcome everyone to another weekly market commentary from StashAway. With me again, our Chief Investment Officer, Freddy.
Hi.
Today we have quite a few things to cover, not so much on like the recent politics that's been going on. But before we get into those, we also want to talk a little bit about StashAway's model and how we maneuver markets as well, right, Freddy?
Yeah.
Events are coming up. Wednesday, the 6th of November, we actually have events in both Singapore as well as in Malaysia. So on the 6th of November in Singapore, we'll have our financial planning basic seminar. So you can attend that. You can sign up as always on stashaway.sg/academy. And for Malaysia, we have our investment basic seminar in KL. And you can attend that as well via signing up on Eventbrite or on stashaway.my/academy. So with that being out of the way, Freddy, let's talk a little bit about the political consequences lately, right? It's always politics, but how bad are all these consequences actually for markets, right, when it comes to that?
Well, the conclusion is that things are not as bad as we have feared. Why is that so? It's almost like an amateur ping pong match or a game of chicken.
Yes.
When you walk into the negotiation table, you ramp up your rhetorics, you ramp up the tension, only to back off and settle for something substantially less.
Yeah.
That's been the case with Trump. It's been the case in the trade talks, right? It's been the case with even Boris Johnson and the EU, and they actually brokered a deal.
Yes.
But the problem is that it has to go back to the hung parliament in UK for approval, and it may not get approved, and they may yet extend the Brexit timeline again, and it may never happen, right? So things were actually just a lot of hot air, a lot of fuss, but they are not as severe as you fear.
Yes, I would agree. So what do you think, for example, like if we do talk about last night, Mike Pence talked last night, right? It was very anti-China.
Oh yes.
Do you think that derails any of the talks?
I think by now the other side, the Chinese, have got used to the style of the Trump administration. Whenever they head into a trade negotiation, it's getting quite, unfriendly first.
Yes.
Sometimes you got to read between the lines.
Yeah.
I think that's the right word.
And I think it's like a lot of just talk as well, right? Like they
talk.
have to do it for the local politics in the US, right? But even if they don't want to, right?
Yeah.
But it's just
for criticizing Nike, for being anti-American.
NBA, right?
Yeah.
All
So
these
these things are just noises, and we have learned, and the market has already learned to move on. You don't see a lot of reaction these days.
Yeah, and I think that's what I wanted to cover next, right? So we've been hearing, the trade war, it's starting to slow down the global economy, or there's signs of that, like with Germany being much weaker and things like that. But the market is still super resilient this year, right? So we still have equity returns of 15+%, right?
Yeah, we're still close to its all-time highs.
Yeah.
We haven't really fallen off the cliff. The fact is amazing that all the bad news just keeps coming from politics, and the economy at the same time has cyclically, it's still growing, but it's growing less quick than before, right? Amid all this, and yet here we still are, right? So it goes to show that, look, we've got to look past the short-term noises and focus on what really matters, right? The market is a fast-moving voting engine. It's not just a market, right? It looks at all the information that comes in, and right now the bad news are out, and it's still here. It's already priced in, it's embraced it. What if something starts improving?
Yes.
For example, the Chinese economy,
and that could really start a rocket ship.
Exactly. So we actually looked at economic numbers around the world, and we've seen a lot of data came in much softer than before. Not recession, but just somewhat slow. But you look at the Chinese numbers, look at a lot of the other countries, non-US economies, they are starting to stabilize around here. And the way the market thing is, it looks forward, and this could be,
one of the catalysts, right?
Yeah, one of the catalysts. Even the fact that something has slowed and something is negative, but it's less and less negative, that itself is reason for the market to move on.
Yeah. No, and I think the central banks have been managing it quite well too, right? They all seem accommodating, which the market likes, that they know at least they will do something if it gets worse or if something would happen. Right?
I think the key here with the central bank, and next week, you're right, that we have the Fed meeting and it's widely expected to cut rates and all that, but it's all about a perception game where the market is now perceiving the central bank as ready. They're standing ready to.
And that's probably more important than actually doing it, right?
That's more important than doing something. And for the central bank, it's like they have to express support, but they cannot do so in a way that says, yeah, we're in deep trouble in the economy.
Yeah.
They have to focus that, hey, no, we're not. The data is actually fine. We're starting to stabilize, and we will intervene whenever necessary, right? So that's sort of a backstop is what the market really needed to stay here.
Yeah. No, I think I totally agree. It really helps out there. So then let's, before we wrap it up, so we talked about economy, we talked about politics, right? What does StashAway then do if you're a user? You might ask, like, how do we navigate through different economic times, right? When economics change, how does StashAway navigate those?
It's a couple of pieces, but I would say even before we rely on StashAway's algorithm moving to adjust, there's a lot of parameter we set up for you from day one. Number one, let's get the StashAway risk index correct. What's your risk level is compatible? And the StashAway risk index is not an average risk number. It's a number based on stress scenarios from past major crises in the markets. And it's just trying to tell you that if tomorrow this happens and surprises everybody, this is the expected drawdown, and is it compatible with your risk profile? I think that's a number one thing to get right. Do not forecast, do not try to predict, assume that the worst analysis happen tomorrow, you're still fine. Number one. And of course, number two, the algorithms is designed to intelligently allocate based on changes in the economy, right? Of growth and inflation whenever they change, and also when valuation changes. So some maybe times are good, but something is way overpriced. Its return cannot be the same as what history suggests
Going forward, right?
Yeah. Right. So the approach reduces the risk of FOMO, fear of missing out, because fear of missing out tends to get everybody in the same room into the same thing. Everybody has bought who's left, right? So that valuation adjustment is to avoid piling into something that's very concentrated, very overcrowded. And conversely, when everybody is pessimistic about something and it's way cheaper than what fundamentals suggest, that's an opportunity, right? So this is an automated, systematic approach from ERA, our investment framework, and that's what it does. But I would say it's equally important that you set up an investment plan, you review a risk level, and then you got a platform would always have a very, very conservative, a very, very good stress scenario, stress indicator to help you plan your risks, to help you plan your portfolio. That is actually, all these things are equally important.
Yes, and I think, and I know we always preach that you should have, your plan set up, your financial plan, and if it's long term, plan for the long term and stick with the long term. But it's a very, very important thing to do, and that's why we keep always, the two of us, continuously saying that. It's not like that we just, this is the only thing we have to say, but it's actually hammering it down and making sure you stick with it. It's so important, right? So to not jeopardize your plans.
We often see users at times like been with us for a month or 2 or 3, but it just so happened that this is a quarter that's pretty ranged, and people start losing patience. But then investing is like planting a tree. You actually, before you have trees, you have to plant the seeds and water it, and let some time do its magic of compounding for you, right? So really, that is the key ingredient for success.
Yeah, absolutely. Thank you, Freddy. I think it was a good insight into what, how also for the users and listeners to understand how we do things. So again, thank you all very, very much for listening today. If you have any comments, questions, please feel free to email us at support@stashaway.com. Also, put them in the comment section below, and Freddy and myself or one of our customer engagement team members will get to them as well. Thank you so much, and have a wonderful day. Goodbye.